talk a little bit about what the market was like and the texture of the market in trade yesterday. We kickstarted a brand new truncated week. And by the time we wrapped up to the day's close, we failed to hold on to those gains. So it was a pretty flat close, nothing to really shout home about, no a real direction. And it seems like it was that sort of consolidation mode that the market was in. Having said that, from those intraday highs, we came off by about 125 points. And it was a lot of those Adani Group stocks that were in the spotlight. They started off the day's low, but interesting, the kind of moves that we witnessed in a lot of these Adani Group stocks across the board, because they came off the day's low quite significantly by the time we wrapped up, and even the likes of an Ambuja or an Adani Green actually wrapped up in the green. Realty and metals, that's where you saw the traction kicking in, and it was the mid and the small cap indices that settled with very marginal gains. But Nikunj, having said that, it was an okayish day of trade yesterday, nothing to really shout home about.
Aman, yesterday's price action I think may look stable, may look flat, but I think was very encouraging. First, locally markets look beyond what came from Hindenburg. So that entire allegation against SEBI chairperson, against Adani Group of stocks, that is something markets have managed to look through, which is very encouraging and very, very logical and sensible. That's part A of the story. Part B of the story, most of the major markets, at least the markets which matter to us, they are now above key levels, which is if you look at, let's say, MSCI Emerging Market Index, or look at where NASDAQ is, or where US S&P has closed last night, most of the major markets which really matter are either in and around where they were before that carnage which happened last week, or they are above last Monday's levels. So it clearly appears that what happened in the global market also, it has not led to any kind of an financial dislocation or any kind of an financial disruption. So it may look like a very ordinary Monday, but for me it was a Monday which in a sense was again a testimony of the fact that the underlying strength of the market is intact. FIs may be selling, DIs may be buying, but ultimately the market has managed to once again ignore local tremors. B, globally things are looking stable. So the trade for next few days may be quiet, boring, nothing big in terms of a grand movement, but that is what you actually want to see.
But Nikunj, we did underperform the rest of the globe, at least in the week gone by.
Aman, that's like just taking a very myopic view of last 1 week what happened. True. Frankly, because we'd also fallen less. So you have to look at it this way, that look, you're looking at the global market comeback purely based on 1 week, but in the recent patch, which is YTD, or even in last 1 month, a lot has been thrown at Indian market. Election, budget, not such great set of earnings, and we've managed to hold tall. So a market like India, which is expensive market, has been outperforming on a relative basis. Last week it may have not done nothing special, but that's par for course. So what I'm trying to perhaps bring out again the same point, that I think the underlying fabric of the market is still intact. Bearish narrative is not making any impact on the market per se, and even though the news visibly is something which could have impacted market liquidity and sentiment in terms of the chain of the events, so the markets are holding on, and for me that is a brilliant sign of what the underlying mood or the tempo is.
Okay, and having said that, let us take into account the kind of move that we witnessed across the global markets overnight. And you did have a pretty choppy one for the major averages. Actually, they really struggled to build onto any sort of a comeback rally that we witnessed, at least in the week gone by. So a pretty so-so close, you could say, for the Dow Jones. We ended absolutely flat. The NASDAQ rose about 0.2%, and the Dow Jones fell about 0.33%. And I think the inflation reports that come out of the next few days, the consumer and producer prices, all of that is going to be keenly watched out for, because do remember the jobs report that came as a bit of a disappointment. Across Asia, it's a bit of a mixed bag, but what's more important is we'll be discussing the Bank of Japan's decision on the interest rate, and you also have some data coming in from Singapore with respect to the GDP numbers, 2.9% growth. And having said that, at a time like this, you've also got the crude oil prices which have continued their rally, so topping $80 a barrel, Nikunj.
See, gold, crude, Bitcoin, all other asset classes, which in a sense was supposed to be in a downward spiral same time last week, largely because of the risk off moment, all of them have started stabilizing. The good bit for I think everybody is that commodities have stabilized and bond markets have not really rallied. So if you look at the 10-year paper, which is the US 10-year paper, which we should monitor very closely, is below 4 at 3.9. The volatility is at 20 and dollar index is at 103. So it looks like, that entire hullabaloo which happened because of the reversal in yen carry trade, that clearly is gone. I mean, we were discussing a very different kind of a scenario, which was about the impact of yen carry trade, how things would reverse in terms of the market, how things would move if there is some more margin selling at the global level. All that surely has subsided. So while the screen may not look very exciting, while global cues may not look rara, but you have to look at the context here, where we were same time last week, where we are right now, and the bounce in most of the commodities, including Bitcoin or oil, I think is a clear indication that normalization in the world is happening. So that technical sell-off, that risk-off scary Monday and Tuesday clearly is history now.
Yeah, absolutely. It's a brand new day with new set of cues to look out for. And once again, we have the MSCI rejig in our lives. But, well, of course, HDFC Bank is going to see inflows, which we've all been waiting for. This time around, 2 in 2 tranches. And a sizable dollop of money at that is expected to see inflows. But what I like is the new inclusions. RVNL, Vodafone Idea. Nikunj, there's Prestige Estates, there's Oil India, there's Dixon, Oracle Financial, Zydus Life. Of course, Bandhan Bank has been dropped out.
See, we must remind our viewers that MSCI follows a methodology. This methodology is based not on valuations. This methodology is based on, so what is the formula? It is not based on valuations. It is based on free float. It is based on promoter holding. It is based on market cap. So typically in MSCI, stocks which have a high free float, stocks which essentially have high, where the market cap gains have been there, one of those criteria are met, the MSCI inclusion actually happens. The interesting one for me actually, if you ask me, would be RVNL, because this is a stock which A is not very liquid, B it's a PSU stock, C it's a stock where we've seen more than institutional participation, DI participation, and the minute you come in MSCI, you actually could see FI participation. So that's one which is an interesting one. Let's look at more names here. That's RVNL for you, 200% higher, and more inflows could actually come at these levels. Now when it comes to Bharti, HDFC Bank, Coal India, that's like par for course, and that really does not matter so much because these are stocks which are dominated by big daddies or the institutional investors. But for me, I think Bandhan Bank is the odd one out, and RVNL could be the interesting one.
Okay, there you have it. That's in terms of some of the movers in trade, and that we'll all be watching out for with respect to the MSCI rejig as well as the other cues. And you've also got the FirstCry parent, Nikunj, that will be making its debut. So that is also something that we'll be watching out for. But let's get a take then as to how you're reading into that.
It's very interesting. I mean, just think about it. What kind of companies are going public? Ola Electric, a completely new age company. FirstCry, something which is, which really serves the need of what really could be called as the young Indian population. Now, the interesting bit here is that, and these are stocks where you cannot, I mean, right now after Ola, the IPO market and some of these new stocks are at a commanding premium. So look at where Zomato is, look at where Policy Bazaar is, Paytm is off from the recent lows. Ola has been like a real cracker of a listing. So I will not be surprised that FirstCry in a sense goes through, and it's not a very large issue, so it actually will get an advantage right from the word go. But then you could ask yourself and say that, okay, what is this business? Is this business something which will be relevant as a category? The answer to that is yes. But this is also a category where competition actually would intensify. And this is a business where essentially you could actually see other big platform companies, they can also become very big also. So while it's a great business, they are making marginal profits. The growth indicators are intact. It's not a very large issue per se. There is scarcity premium which the company will enjoy. But the challenge here is that, for example, when Nykaa went public, it was a great platform. But soon that business got disrupted by Tata's and by the Reliance. That, in a sense, becomes the challenge with FirstCry. That's a platform, it's a brand which will grow, but like they say, watch the space. When others will recognize, okay, this is the potential of this business, you never know how competition will intensify. That's my only limited point here.
Yeah, absolutely. Okay.
If you like this video, then like, share and subscribe to ET Now.